Hey friends, I am excited to be able to share this winery chart of accounts with you. This is the basic template that we use when we're setting up a new winery client. Just want to run through this and maybe talk through a couple things. And just to give you the general framework that this is a starting point, it's going to be your own and you want to make it your own. And so there's probably accounts here that you don't need, and then there may be some accounts that aren't in here that you do need. And so we're going to start with your current assets and cash equivalents. We put your checking and your savings, your cash on hand in the till, and then you've got your pending deposits. And so we use clearing accounts to record our sales. So those are listed here along with undeposited funds. You can't actually do it like this in QuickBooks Online because undeposited funds ends up sitting down here. But in an ideal world, this is where it would be. When you're working within QuickBooks, you'll just see what the small limitations are that you have to work with there. We generally use all caps for parent accounts and try not to put any transactions there and then put all the transactions in the sub account. Sometimes you're going to find something like accounts receivable that just doesn't have any sub accounts. Generally, you're only going to have one accounts receivable account. We keep both wine inventory and bottled wine inventory on the balance sheet. We don't keep packaging and merchant food inventory for all of our clients. It depends on really whether that's a big component of your business. If it's not, you can kind of just put those in your COG as you purchase them. And then you'll see in here that we do keep some sub accounts under bulk wine inventory just to keep track of what's going on. And this will make more sense when we look at the cost of goods section, but generally this is where the capitalized costs are going to be. And then we transfer out some of that value and we transfer it right over in here into your bottled wine inventory. And then we transfer your bottled wine inventory to the COG section of your chart of accounts. So we've got your most liquid assets, a little less liquid, and then your most non-liquid assets down here. I haven't listed sub accounts, but for many wineries, we keep like a sub account of their different winery equipment in here. You don't have to do that if you maintain a good depreciation schedule elsewhere, but you may choose that it makes sense to you to have sub accounts for each one of your different pieces of equipment that you own. Land isn't in here. You may have land, you may have buildings, things like that, accumulated amortization and accumulated depreciation are your contra accounts that are going to reduce the overall value of your fixed assets. Current liabilities, this is a section that gets ignored a lot, and I like to harp on that we really need to keep this reconciled to make sure that your profit and loss is correct. But just as far as setting up, we tend to just try to maintain one sales tax payable account. We generally have several things under payroll liabilities, payroll taxes payable, benefits payable. Sometimes we separate those out into different benefits. Just if it's easier to reconcile them, we will keep like health and dental, simple IRA separate so that it's easier to reconcile. We keep credit cards separate. Sometimes you'll have like a master credit card and two sub accounts. And we, just like bank accounts, we like to list out the name of the bank and the credit card. So this would actually, in our system, be named Bank of America Credit Card X5678 or whatever the account number is for that. Line of credit technically belongs up in current liabilities because it's due within 1 year. Sometimes we'll see that down in notes payable. It's not the worst, but technically belongs up here. In QuickBooks, we often set this up as a credit card, even though it's not, but that enables us to hook it up to the bank feed, which is really super useful. And these accounts for equity are really general. They're going to be different depending on your business structure. That's something that you really want to check with your accountant about. Different accountants have different preferences about how they want to track this and see this listed here. In your profit and loss, we like to break wine sales up into your different channels, and then we like to see all food and merch together because it's generally a more minor income category. We keep event income up here. If we have taxable and tax exempt categories, we like to keep them separate. So in reality, we often have food sales taxable and food sales tax exempt because in Washington, packaged food is tax exempt, but food served to be eaten on premises is taxable. So we just keep those separate so that when we're filing the sales tax report, it's easy to separate out what's taxable and what's not. Same thing with venue or site rental. That can be taxed as a service instead of retailing. And so we keep that separate from other event income, which is taxed as retailing. And then there can be other miscellaneous things in here depending on what your winery does. Cost of goods sold. So this gets complicated, but the basic idea is that we're going to list all your production costs and then we're going to zero them out at the end of every month or whatever accounting period you get around to doing it, quarterly, annually. And then we're going to zero this whole thing out and those are all going to go to the balance sheet. All these vineyard costs are going to become part of your bulk wine. All your bulk wine and cellar costs are going to become part of your bulk wine. We get production labor in here. For tax purposes, for small wineries, you don't necessarily need to capitalize all of these things, but this is sort of a standard where we start, and sometimes it's just best practice to do it like this and capitalize all of these different costs. Bottling costs, those get zeroed out at bottling, or they get zeroed out every month to the cost of bottled wine. And then when the wine is sold, we calculate outside of QuickBooks what the cost of that wine sold is, and then we put it in here as a journal entry: the cost of your wine sold, the cost of samples and wines by the glass, cost of shrink and adjustments, food merch COGS. These may just be purchases if you don't keep inventory on your books, or you may calculate out the cost based on your inventory levels here. Expenses. So in our blog post, we talk about really having just 6 or 7 different sections for expenses. That's kind of an ideal, and maybe that's what you prefer and like to see these in fewer. I don't think this is 6 or 7. There's probably 10 or 12 or 14 different sections here. So it's kind of your preference about how many different expense sections you want to have. We have an uncategorized expenses where we leave things until we can figure out what they are for from communicating with the client or whatnot. We have labor, and then we separate out owner compensation, including owner benefits if it's an S Corp, just because we need to keep track of that for tax purposes. You might have guaranteed payments accounts here if you're a partnership, payroll taxes, benefits, and then we kind of group together everything that's sort of an operational expense for running your tasting room and your wine club. If you wanted to track these separately, you might have 2 different sections here. We also have some wineries with 2 different locations that have a section for their Chelan location and a section for their Seattle location, for example. And that works pretty well. Event expenses, shipping, storage, cost. These sometimes end up in COGS, which is fine. There's just different opinions. It's not really the end of the world. Don't really go into the cost of your winemaking, but you can certainly just put them up in this section and just have them written off directly here. It doesn't really make a lot of difference, but they're technically not cost of making wine, they're cost of selling the wine, and so we have them down here in the template. We have merchant fees in its own section because it is sometimes a giant expense that we like to watch it rather than lumping into office and admin. And then we have office admin, pretty straightforward. Rent, if we have rent, we like to separate each one out separately. It's just easier to track that way. Sometimes you'll have other occupancy costs. Sometimes these are so minor, or that you might want to group together all your rent, utilities, and your repair and maintenance together. Auto expenses are important to track. These could be a sub account under repairs and maintenance or under equipment costs if you wanted. If you have more than one vehicle for your winery, you really should keep track of those separately because that information is needed for taxes. Professional fees, travel, meals, wine, and education. And we kind of like to keep this as its own thing because these are sort of discretionary expenses of the owner, depending on what kind of travel you do that year, what conferences you go to, what coaches you sign up with. And so we keep these kind of all together. Wine purchases for research in there. Don't let that one get too big. And then depreciation and amortization, of course. Other income, this is all non-operational income. So in revenue received, but not in the general course of doing business. And so you'll see insurance claim income, gain and loss on sale of assets. If you sell an asset, you'll want to put that there and have your accountant help you figure out what the actual gain and loss is after any accounting for the basis and any depreciation recapture. Interest income, undistributed tips, this would be tips to the owner, have to be included as income here. So we put them there so we don't lose them. Down in other expenses, we put interest expenses here. We break it out by interest on each loan, and then we name the loan here so that we can keep track of it, so we can easily see what the expense that's been posted year to date for that interest for each loan is. And these are generally non-deductible expenses, so charitable contributions, which generally flow through to the owner, and penalties and fines, which are a non-deductible expense. And if these end up here in your expenses, not the end of the world. You just need to be aware that they're not generally deductible in the same way as these other expenses. So that's about it. This is, don't get caught up too much on the numbers. Basically, your accounting system is going to use these numbers to organize things. So if you like to see them slightly differently, then you can use slightly different numbering. But in general, this is kind of the groupings that we use. The 1,000s for the assets, 2,000s for the liabilities, 3,000s for the equity, 4,000s for the income, 5,000 cost of goods sold, and then expenses are 6,000, 7,000, and then we have the 8,000 and the 9s down here. So hopefully this was helpful, and we look forward to hearing from you.